U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Yes, the Federal Reserve announced a huge interest rate cut of 0.5 percentage point today, which is the first time we have seen a rate cut in more than 4 years. And absolutely, this is going to have an impact on your wallet. I'm going to tell you all about that in this video. But don't be confused. This rate cut is not the Federal Reserve saying, mission accomplished, we've solved the inflation problem. No. Yes, the Fed says inflation has come down, but the Fed chairman says not by enough. Also, before I get into this, I want to make it very clear the Federal Reserve chairman again today said decisions about interest rates have nothing to do with the election. I have a whole separate video that you're going to want to watch about what he said about that today, but I want to keep this video about what's happening with your money. So yes, 0.5% interest rate cut impacts lots of things that have to do with your pocketbook. It makes borrowing money a little cheaper for average Americans and for business. That means your credit card rates will likely start coming down. New car loan rates will start coming down. Personal loan rates will start coming down. Your adjustable mortgage rate will start coming down. Yes, this also impacts new fixed mortgage rates, though the market has already priced in today's rate cut. And as I've been reporting here on this page, we're already starting to see those 30-year fixed rates go down. So you're probably wondering, if the inflation problem isn't solved yet, then why did the Federal Reserve cut interest rates today? Because the Fed has a dual mission: to keep prices stable, but also ensure maximum employment. Now, to keep prices stable, the Fed needs to keep inflation under control and keep prices increasing at only 2% every single year. The last inflation report we saw had inflation sitting at 2.5% year over year. So the Fed was like, yeah, our plan to keep interest rates high so this economy cools off has been working. But on the other side, we also saw recent reports about the unemployment rate starting to tick up and employers starting to hire fewer people. See, interest rates also impact the jobs market, and some think the Fed waited too long to cut interest rates, and the high cost of borrowing money is not only hurting average Americans, but now also hurting businesses. But the Federal Reserve chairman today defended the Fed's policy decisions and said, we are not late to the game.
We don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind.
The Federal Reserve has penciled in at least one more rate cut this year. By how much and when will depend on the incoming data on inflation and jobs.